What if I told you that you could own real gold, not jewelry, not ETFs, but actual vaulted gold, with just a few taps and $10 in your pocket? In this video, I'll show you exactly how to invest in real gold, instantly, securely, and globally. Let's get into it.
Welcome to ZED-Ed
Great to be here.
Today we're looking at something, well, pretty timeless, really. Gold. It's been valued forever, it seems, and definitely having a moment right now.
It really is. And the analysts we looked at, they were trying to unpack it, not just as this shiny metal, but as an investment, as a commodity on the world stage.
Okay.
Yeah, like why do people flock to it when things get uncertain? How does it actually work in the market? And the big question, should it have a spot in your portfolio?
Right. So let's start maybe element 79, auto gold. The analysts really went back to its history, didn't they?
Oh, absolutely. Deep roots. Thousands of years it's been used as money, obviously jewelry, but fundamentally as a way to store value.
And it's different from regular currency because
You can't just print more gold, right? It has to be mined, refined, processed. It takes real effort.
there's an inherent scarcity.
Exactly. That physical reality, that effort involved, gives it this kind of enduring value that, paper money sometimes struggles with.
Okay, makes sense. So moving past the history, how does it function today as a commodity?
Yeah, it's a physical good. Just like oil or wheat, it's bought and sold across the globe.
And the price?
Driven by supply and demand, it trades on big exchanges, COMEX in New York, the LBMA in London, places like that. And we usually talk about the price per troy ounce.
Got it. And what's it mostly used for, commodity-wise?
Well, jewelry is the big one, maybe around half the demand, give or take.
Okay.
But it's also really important in electronics. Great conductor, doesn't corrode,
Ah, right.
and maybe crucially, central banks hold huge amounts as reserves.
That's interesting what the analyst pointed out. Unlike oil or wheat, gold doesn't really get used up.
That's a key difference. Most gold ever mined, it's still around. It can be recycled, melted down, reused.
So it works better as that store of value thing.
Exactly. It persists in a way that consumable resources just don't.
Okay, so if it's this durable, scarce thing, how does that make it an investment? Why do people actually, buy it and hold it?
Well, the analysts highlighted a few main reasons. First, it's seen as a hedge against inflation.
Meaning?
Meaning, when your everyday currency starts buying less, gold historically tends to hold its value better. It protects purchasing power. We saw prices jump in the 70s and again around the 2008 crisis for that reason.
Okay, protection from inflation. What else?
It's seen as a safe haven. When markets go wild, stocks are down, bonds are shaky.
People get nervous.
Right. And they look for something solid, tangible. Gold has that history of stability during economic storms. It feels, safer.
And the third point, diversification.
Yes, exactly. The analysts stress this. Gold often doesn't move in lockstep with stocks or bonds. Sometimes it goes up when they go down, or vice versa.
So adding it can smooth out the ride for your overall portfolio.
Potentially, yes. It can lower overall risk because it reacts differently to economic news. Portfolio balance, basically.
Okay. So if someone's listening and thinking, maybe I should look into gold, how do they actually do it? The analysts mentioned a few ways.
Yeah, the most direct way is just buying physical gold. Bars, coins, that sort of thing.
Right. Hold it in your hand or a safe.
Or a safe, yeah. Then there are gold ETFs, exchange-traded funds. Like GLD is a big one.
How do they work?
They usually hold physical gold in vaults, but you buy and sell shares of the fund on a stock exchange, just like any other stock. Much easier for many people.
Okay. What else?
You could invest in gold mining companies. Their fortunes are obviously tied to the price of gold and their ability to get it out of the ground.
A bit more indirect?
Yeah. And then for more sophisticated investors, there are futures and options contracts, betting on future price movements.
Gotcha. But there was a really crucial point the analysts made about gold. It doesn't pay you anything while you hold it.
Super important. No dividends, no interest. Unlike stocks or bonds, your only potential profit comes if the price of gold itself goes up from when you bought it.
That's a big difference. Okay, let's weigh things up. Pros and cons.
Pros. It's proven itself as a long-term store of value. It can potentially hedge against inflation, currency losing value. It's recognized and traded everywhere, so it's liquid. And it can add that balance during market slumps.
And the downsides?
Well, that lack of income is number one for many. It can also be pretty volatile, price-wise, in the short term. If you hold physical gold, you've got storage costs, maybe insurance costs.
Right.
And honestly, over very long stretches, its returns have sometimes lagged behind things like the stock market.
It feels like gold is especially talked about right now, though.
Oh, definitely. Big time. Inflation fears are high, lots of geopolitical uncertainty. These are classic drivers for gold.
And the analysts mentioned central banks buying a lot.
Record amounts, actually.
Yeah.
Especially countries like China and India in the last couple of years. They seem to view it as a strategic asset, tied to economic stability, maybe even a bit of geopolitical maneuvering.
Interesting how that connects back to its fundamental nature, its history.
It really does. Plus, you've got new ways emerging to own it, digital gold platforms, even crypto tokens supposedly backed by physical gold, making it more accessible.
And performance. What did the material show recently?
Well, looking at prices in British pounds, for example, gold nearly doubled over the last 5 years. That's roughly a 20% annual return in that specific window.
Wow, that's significant. But it's not always a smooth ride-up.
Definitely not. History shows steady climbs, but also big spikes linked to crises, oil shocks, financial meltdowns, that kind of thing. The analysts were clear. Like any investment, when you buy matters. Your entry point really affects your return.
Sure. And speaking of getting started, especially with those digital options, the analysts pointed to one platform, OneGold.
Yeah, they mentioned it as a sort of easy-to-use, trusted platform for buying digital gold, also silver and platinum. The key is it's backed by actual physical metal held in secure vaults.
So you own a claim on real metal.
Right, and you can invest basically anytime, 24/7, track the prices live, even set up regular automatic purchases if you want.
Okay. And they mentioned a referral link too, right? If you're thinking of trying it.
Yes. If you use the link and make a first purchase of $100 or more, you get a $5 credit. It's a little something to get started exploring digital metals. We'll make sure that link is available.
Great. So wrapping this all up, is gold right for you, the listener?
Well, the analysts suggested thinking about it if you're really looking for stability, for that diversification piece, or a hedge against uncertainty.
But probably not your whole portfolio.
Oh, definitely not. Balance is crucial. Gold isn't magic, but it has this incredible track record through centuries of turmoil.
And the analysts had this final thought. Framing gold maybe less as a pure investment and more like insurance.
Yeah, that's an interesting shift in perspective, isn't it? If you think of gold as insurance protection for when things go wrong, rather than just chasing the highest return, what does that change about how you see its role in your own finances?
Something definitely worth pondering. If you found this useful, please do hit that like button, subscribe to ZED-Ed for more discussions like this, and maybe share it with someone else wondering about gold.
And we'd love to know, do you invest in gold? Let us know your thoughts.